There's $30 trillion with a T, 30 trillion controlled by advisors. And when I say controlled, I literally mean controlled, meaning the person who gave it to the advisor doesn't make the decisions anymore. Those advisors make the decisions, and they happen to be primarily, not that there aren't some good young advisors, but primarily they're of a certain age and experience level, and ETFs are their go-to tool.
It's been 2 days since the U.S. Securities and Exchange Commission approved 11 spot Bitcoin ETFs. We've had a full day of trading with record-breaking transaction volumes, not only for the newly approved ETFs, but also for the ProShares Bitcoin Strategy ETF, BITO, which smashed its all-time volume record on Thursday with over $2 billion traded. According to Eric Balchunas, a senior ETF analyst for Bloomberg, some of the transactions might be redemptions, as investors moved money from the futures ETF to the newly launched spot ETFs. However, Eric is certain that BITO's liquidity will serve for a while longer as a market maker for the new ETFs. Renowned investor, hedge fund manager, and digital asset enthusiast Mark Yusko has been speaking positively and highly about spot Bitcoin ETFs since BlackRock filed its application in June. Despite the previous repeated rejections by the SEC, Yusko was certain that the interest of a large Wall Street player like BlackRock would sway the commission, and by all indications, it did. But BlackRock was not the only factor that helped push things along swiftly and smoothly for the most part. The judge's ruling during the grayscale case against the SEC was the other factor. The judge all but informed the commission that it didn't have enough evidence to deny spot ETFs when it had already approved futures ETFs. With all that drama now completely behind us, Yusko is certain that things are about to get way bigger than everyone can imagine. The Morgan Creek Capital founder explains that ETFs are the #1 preferred tool for advisors. According to an investment news report, more than half of financial advisors say they now prefer ETFs over mutual funds. This is largely because ETFs offer lower costs, tax efficiency, and slightly higher liquidity. A Cogent syndicated report from August also revealed that 91% of advisors allocate some assets to ETFs, of which 48% said they plan to increase their use within client portfolios over the coming year. This approval could not have come at a more opportune moment, and everything has indeed changed for Bitcoin and the entire digital asset space. We will now bring you clips from Mark Yusko's discussion with Scott Melker and Hunter Horsley, the co-founder and chief executive officer of Bitwise, one of the 11 firms that received the SEC's green light on Wednesday. Please watch, share, and like this video. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.
The average boomer, they're not going to self-custody. They're not going to buy Bitcoin the way all the maxis want them to. So this is a necessary step. And the thing that people just don't seem to understand and appreciate, and I don't know why you wouldn't like this, there's $30 trillion with a T, 30 trillion controlled by advisors. And when I say controlled, I literally mean controlled, meaning the person who gave it to the advisor doesn't make the decisions anymore. Those advisors make the decisions, and they happen to be primarily, not that there aren't some good young advisors, but primarily they're of a certain age and experience level, and ETFs are their go-to tool. It is their #1 tool. It's not mutual funds. It's not stocks and bonds. It's not treasuries. It's not cash. It is ETFs. And so to be able to own the greatest diversifying asset in the history of assets, just let that sink in for a second. There are a lot of diversifying assets, commodities, hedge funds, private equity, venture capital, a lot of diversifying assets. When you add them to the portfolio, your Sharpe ratio goes up, your risk goes down, your return goes up. Bitcoin is the greatest diversifying asset ever. Over 15 years, it's got 0.0 correlation to bonds, 0.15 correlation to stocks. You add it to your portfolio gets better. If you would have gone back a year ago, you would have said zero chance of a Bitcoin ETF. After 9 years of trying and everybody, and I actually started tweeting maybe 9 months ago that it was going to change because BlackRock was going to get approved. And everybody's like, they haven't even entered the fray. They haven't even, like, just trust me.
Said it here.
BlackRock is going to be first. And I actually said, and I said this right up until Friday, that they were going to be the only one. I actually believed that the SEC would kingmake, right? I believed that they would defer. And Hunter and I talked about this, that look, we own little pieces of Bitwise, and we own little pieces of Amun, which is part of 21 shares. So I really wanted them to get approved, but I didn't think they were going to. I thought that they were going to play favorites and give all of it to Uncle Larry. And I'm glad I was wrong, because it's way better to have an open free market. And 11 on 11 is kind of cool. But I think what changed is a couple things. A bunch of 2x4s to the head by the courts. So that certainly changed.
A lot of credit to Grayscale. A lot of credit.
Yeah, a lot of credit to Grayscale, and look, there's been a bunch of other things that have changed. Now there's the sinister side, which says this is a Trojan horse, and this is, hey, let's suck all the Bitcoin into these boomer wrappers, and then Max Kaiser's out saying, and then we're going to seize it all. Look, if you read the fine print, I mean, it technically is possible. That is one of the risks that people have to talk about. I don't think it's a real risk. I don't think it's likely. But look, that's another narrative that's out there. On the ETH, I don't think it's coming, because there's no catalyst for GG to give in on that one.
Meanwhile, members of the cryptocurrency community on X are divided over the latest update about SEC Chair Gary Gensler's role in approving the spot Bitcoin ETFs. According to official SEC documents now circulating on the social media platform, Gensler voted yes for the approval of the ETFs, and his vote was the deciding vote that got us the approvals. The document shows that two SEC commissioners, Hester Pierce and Mark Uyeda, voted for approval, while Caroline Crenshaw and Jamie Lizarraga opposed it. The vote split at 2-2, and Gensler's vote for approval was the deciding vote. Despite this baffling development, Gensler is still as anti-crypto as possible. In the statement he issued after the announcement, he quickly clarified that the approval of the spot Bitcoin ETFs doesn't mean the commission has approved or endorsed Bitcoin. The SEC chair concluded the statement by warning investors of the risks of investing in crypto assets. He also made it clear that the approvals would not have come if not for the judge's ruling in the Grayscale case. Let us know your thoughts on Gensler's two-faced behavior as we bring you more clips, this time of Hunter Horsley discussing how much interest investors are showing in the Bitcoin ETFs.
Because the way that these netted out were that they're cash creations and redemptions, ultimately an investor is not able to take Bitcoin that they already own and put it directly
sell
into
it.
funds.
Yeah, to be clear, that was saying sell it and then buy it. Right, correct.
Yeah, so I don't actually think, I know some investors that were considering that, but I think that most won't end up doing that, because taking the tax event, if they don't own it in an IRA, is just not appealing. I do think that you'll have some investors who own a very high fee product in an IRA swap out of that for a low cost product, because why not? You don't have the taxable event. So I think, to your point, Scott, that wouldn't necessarily be new demand. And we'll have to see how the day unfolds, but we hear a huge amount of demand, and that would be new incremental demand into the space. I think, Mark hit on this before. There are many types of investors for whom this is really the first time they can access the space they've read a lot about, they've thought about, but they felt that they couldn't access. Maybe they couldn't access it because they literally didn't have a product that worked on their platforms. They just felt that the products that were available were not feasible for them. We've run a survey of financial advisors. We serve thousands of firms and branches, over a dozen banks and broker-dealer platforms. We've run a survey for the past 6 years. Every year, a Bitcoin ETF is the top most desired product for accessing the space. And in the results that we published just, I think, a week ago, 88% of advisors said that they were waiting for a Bitcoin ETF to invest in the space. So I'm not viewing this event as, of course, there will always be some rotation from existing investors I do think it's very sensible for people who are in a high fee product to consider moving to a lower fee product. But really, the story here is, there's 20 or 30 trillion dollars in the wealth management channel. That's people's savings. They have aspirations around it, and there are many advisors who've been wanting to help their clients benefit from this space, but have felt that they couldn't responsibly do so. And then, of course, there's IRAs, there's institutional investors, and when you add that all up, I just think that will be the dominant number and determinant of where things come out. But of course, we'll have to see, and not everyone is in a position to make an investment in the first hour, 3 hours. For many of these types of investors, they're not sitting at their computer waiting to see a ticker populate, and they're going to cancel all of their meetings today. They'll discuss it when they have time, or the next investment committee, or the next conversation with the client. So I think this will be a very interesting story this week. There are people who've prepared, but I think the vast majority of the audience that is coming online that makes this such a historic moment, they'll be contemplating this over the course of weeks and months. And last year, to give a sense of proportion, we did 20,000 meetings and calls with financial advisors and institutional investors. And I can just tell you, there are many of those types of investors who are excited about these products, who've been wanting these products, and they set the meeting for 3 weeks from now, because in their mind, that is moving fast. And I'm not dismissive of that. That is, on their time scale. It's not like they have to buy an IPO in the first hour after it opens. So I think that there's huge incremental inflows that sit behind the bridge that was just built with these products. And there will be some rotation, I think, especially for investors who want to get out of a high fee product they've been trapped in. But I think the big story is the gate that has been opened to millions of investors.
In other news, ARK Invest founder and CEO Cathie Wood has opined that the approval of spot Bitcoin ETFs has significantly improved the chance of her massive price target for Bitcoin. In a recent interview with CNBC, Cathie explained that her firm's bull case prediction of Bitcoin hitting $1.5 million by 2030 is now more probable because of the SEC's green light for Bitcoin ETFs. Our base case is in the $600,000 range, Cathie began. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. She continued by adding, "You can see the building blocks on our website. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based monetary system in history. It is a very big idea." On Wednesday, another pro-Bitcoin CNBC guest shared their price outlook for Bitcoin. Tom Lee, the head of research at Fundstrat, an independent financial research firm, replied to a question about his price predictions for Bitcoin in 1 year and 5 years. He said, "I think in the next 12 months, something over $100,000, maybe over $150,000. In the next 5 years, there's a finite supply. But now we have a potentially huge increase in demand with a spot Bitcoin approval. So I think in 5 years, something around 500,000 is definitely achievable." What are your thoughts on these predictions and outlook for Bitcoin both in the short and long term? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your GigaStar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.